It's so easy to get lost in the flood of headlines these days. You feel bombarded, but maybe not really informed.
Absolutely. Just noise sometimes.
Exactly. So today on Deep Dive, we want to cut through that, give you a real shortcut.
Hmm.
Our mission is simple. Take a hard look at the big global stories from the last, say, 12 hours. We're zeroing in on how the financial markets are reacting, what's really moving the needle.
And we've got a good mix of sources for this, right? Market reports, news
Yeah,
analysis.
exactly. We've curated a stack, market reports, Reuters, The Guardian, even some interesting takes from YouTube analysis, trying to get that multifaceted view.
Good stuff. Timely, too.
Right. So the goal is to unpack what's most important, maybe spot some surprising links, and hopefully leave you feeling genuinely clued in on the big economic currents right now.
Sounds good. Where do we start?
Okay, let's unpack this. Kicking things off, there's this interesting mix happening. On one hand, some market stability, but also some really quite remarkable gains. Well, the U.S. dollar, for instance. It steadied up quite nicely after dipping a bit. Seems like it was helped by really strong demand at those U.S. Treasury auctions.
Ah, okay. So, solid demand for treasuries underpinning the dollar.
Seems like it. But then alongside that, you've got this almost palpable surge in risk appetite across global markets.
Ah.
It's quite the contrast.
Yeah, it's striking, isn't it? That dollar stability happening at the same time as, well, some big moves in riskier assets feels like a real boost in investor confidence somewhere.
Totally. Like parts of the market are just shrugging off some of those background worries
Mm-hmm.
and leading that charge. I mean, undeniably, it's Nvidia.
Oh, yeah. Hard to miss that story.
Right. They just made history. First company ever valued at $4 trillion.
Just staggering.
It really is. And that massive surge, driven by this just relentless AI demand,
Yeah,
it's really reinforced that positive feeling across the board.
absolutely. But it's not just Nvidia, is it? The ripple effects seem broader.
No, you're right. And what's really noteworthy is how this confidence isn't just in like traditional big tech. Look at Bitcoin.
Okay. Hovering near all-time highs again.
Exactly. Around $111,062 last I checked. And Ether's gaining too.
Interesting. So, a shift towards crypto. Why now, do you think?
Well, the thinking seems to be investors are moving into crypto partly on optimism about, future Fed rate cuts.
Ah, the rate cut expectation again.
Yeah. And also maybe a perception that the impact of these trade disputes, these tariffs, might be more subdued
Hmm.
or maybe less relevant for crypto specifically.
Less direct impact, perhaps.
Could be. And that upbeat feeling, it definitely spread to Asia, the MSCI Asia ex-Japan index.
The key one for the region, excluding Japan.
Yeah, that rose about 0.4%. And reports suggest it was directly helped by Nvidia's performance.
It makes sense. Tech sentiment lifts all boats sometimes.
But here's what's really remarkable to me. Investors seemed largely, quote, unmoved by these looming U.S. tariffs. The ones on copper, 50%, and Brazilian goods, too.
Really, unmoved, despite those figures.
Apparently. It suggests maybe they're expecting potential reversals. Or perhaps they're just so buoyed by those Fed rate cut hopes that the tariffs are taking a back seat for now.
That expectation of reversals, that's a critical point, I think. It taps into the current market psychology.
How so?
Well, it implies that, yes, tariffs are a concern, but maybe they're not seen as this permanent, unshakable thing right now, which leads to that question. Are markets getting tariff fatigue?
Tariff fatigue. I like that phrase.
Yeah. And if they are, what does that actually mean for future trade talks, for how markets react down the line? It's something to watch.
Definitely. And that whole idea, tariff fatigue and what's already priced in, it seems to play out differently depending on where you look.
Right. Not uniform.
No. While some sectors are riding that optimism wave, others, like commodities, they're facing different pressures. Though there are caveats.
Okay, like oil. How's that looking?
Oil, yeah. Brent and WTI crude prices, they edged a bit lower, settling sort of in the upper $60 for WTI, low $70 for Brent.
And the reason?
Primarily, traders weighing that tariff-driven economic uncertainty against those Fed minutes, which, hinted at limited immediate easing.
Okay, so the tariff jitters plus the Fed caution putting some pressure on oil.
Exactly. But, and this is the important caveat, the decline wasn't steeper.
Ah, right. Why not?
Because strong U.S. gasoline demand and pretty robust air travel activity, they provided a significant cushion, prevented a bigger drop.
Good point. So underlying real-world demand is still a powerful factor, kind of counteracting the headline fears.
Yeah, it's a great example of that. Meanwhile, gold, the classic safe haven.
What's it doing amidst all this?
So a slight climb, up around 0.1%. Not huge, but up.
And the drivers there.
Mostly a softer dollar, bond yields easing a bit, and yes, those rising tariff tensions giving it some support.
So still some safe haven appeal.
A little bit.
Yeah.
It's almost like the market is saying, okay, maybe we have tariff fatigue, but we'll still hedge our bets slightly with gold just in case.
Yeah, that makes sense. Gold's modest move kind of reinforces that tariff fatigue idea, doesn't it?
How do you mean?
Well, if markets were truly panicking about tariffs, you'd expect gold to spike much more sharply.
Ah, right.
Its small gain suggests more of a nuanced reaction. The safe haven demand is there, but it's not overriding the optimism we see elsewhere. It's balanced, maybe.
Balanced, yeah. Okay, speaking of cautious stances, let's talk about the Federal Reserve. Those detailed notes from their last meeting, the minutes.
Always crucial to parse those. They offer a window into their thinking.
Definitely. And they revealed most officials were pretty reluctant to cut rates immediately.
Right. Citing inflation risks primarily.
Yeah, exactly. Even though most seem to favor easing later in the year. So how do we square that? The market's clearly optimistic about cuts, but the Fed sounds very cautious. Is there a disconnect?
That is a really key question right now. I think it reflects the Fed's really delicate balancing act.
Trying not to kill growth while fighting inflation.
Precisely. And their signals, as you know, just ripple through everything. Currencies, commodities, stocks.
So the market might be hoping for cuts.
Right. The market's pricing in hope, maybe.
Yeah.
But the Fed is clearly signaling we need to wait and see the data.
Data dependent, not market dependent.
Exactly. And that directly influences currencies and commodities. It tells us they're not going to jump just because the market wants them to.
Makes sense. Now, shifting gears a bit, but related, geopolitics. We're seeing some pretty intense drama around Brazil.
Ah, yes, the tariff threat there.
Yeah, that looming 50% U.S. tariff threat on Brazilian exports. It really hammered the Brazilian real. It tumbled nearly 2.8%.
Ouch. And this is tied to accusations about Brazil's handling of former President Bolsonaro.
That seems to be the context, yes. But what's fascinating, I think, is President Lula's reaction.
Pushing back strongly.
Very strongly. He's really emphasizing Brazil's judicial independence, refusing to bow to U.S. pressure.
So it's a direct clash, isn't it? National sovereignty versus international economic leverage.
Absolutely. It's a stark reminder that global markets aren't just about numbers. They're deeply tangled up with politics, national pride.
Willpower, yeah.
And then, across the Pacific, China's also doing a tricky balancing act, especially after Trump's latest tariff announcement.
How so? What are the analysts saying?
Well, the warning is that if Beijing retaliates too aggressively, it could actually backfire, hurt China's own regional partners.
Ah, so it complicates their whole geopolitical strategy in Asia.
Exactly. Any move they make has these wider ripple effects, hitting complex supply chains, political alliances.
It's like a high-stakes chess game, but with economics and geopolitics all mixed together.
Yeah.
Every move has consequences far beyond the initial target.
Absolutely. Okay, now, here's something unexpected. A real twist in the narrative, actually.
How about that?
Turns out, all this volatility we've been talking about, the trade tensions, the economic uncertainty.
Yeah, causing headaches for many, presumably.
For many, yes. But global banks, they're actually forecasting a significant windfall from it.
Really?
Higher trading volumes, all the market churn, especially linked to tariffs and currency swings. It's expected to generate a pretty remarkable 7 to 10% boost in revenue for global banks this year.
Wow. A 7 to 10% boost, that's significant.
It is. And if we connect this to the bigger picture, it actually marks their best performance since the financial rebound back in 2009.
Since 2009. That's incredible. It just shows, doesn't it? Even when there's uncertainty, even instability.
Certain sectors thrive.
Right. Especially those geared towards market movement, towards trading. It's a powerful reminder that volatility, well, it's a risk for many, but it's pure opportunity for others.
The ultimate paradox of market dynamics, as you said.
Yeah.
So, quite a journey today. We've unpacked some really fascinating, almost contradictory dynamics.
Definitely.
We saw that surprisingly resilient market sentiment, especially in tech and crypto, kind of defying those tariff jitters.
While the Fed stays cautious.
Right. That cautious, data-driven Fed approach, alongside those specific geopolitical hotspots like Brazil and China.
And then the banks finding opportunity in the chaos.
Exactly. That unexpected boost for global banks. So the big question, what does this all mean for you listening right now?
Well, I think the key takeaway is that these seemingly disconnected events,
Mm.
a tech giant's valuation over here, a tariff dispute way over there, the subtle wording in a Fed report,
They're all connected.
they are all threads in the same global economic fabric. They influence each other constantly. Understanding those connections is really key to making sense of it all.
Recognizing patterns instead of just seeing noise.
Precisely.
Okay, so here's a final thought for you to chew on as you go about your day. Consider this. How might these contradictory trends, this market enthusiasm for tech and crypto, bumping up against lingering inflation fears and these escalating trade disputes, how might they shape things in the coming months?
Not just investment strategies, but maybe daily life too.
Yeah. Think about how these powerful, sometimes opposing forces could push different industries, different parts of the world even, in totally opposite directions.
Creating both challenges and maybe some really unexpected opportunities.
Exactly. So something to think about.